Hello and welcome to another update video about oil. Only a few days ago I made an oil video and I highlighted that probabilities were quite balanced, but that we have two breakout setups to watch, both wave counts valid, white and yellow. And I highlighted that, the next few days or next couple of weeks could really be instrumental in deciding the direction that oil is going to take in the coming months, or at least in the coming weeks going forward. And it seems like we have the first decision, at least if from what it looks like now. We have a break of the green trend line. That was one of the breakout setups, and it's a nice follow through actually that we have here. The yellow wave count would have worked out as well, but it would have required a rally first of all to the red trend line, and then from there possibly a break to follow the yellow third wave higher, which would then eventually have taken us into, at least from the projection, into the $100 region to complete a larger B wave. But seems like oil is going the other way, which means that the yellow microstructure can be taken out. It could still technically be maybe a reset of this wave too. That's certainly something that's possible, but it seems like the white scenario is in control now anyway. So yep, it could. I mean, it could still be a 1-2 setup that's forming here, right? But then the invalidation point for that is the $63 level. There's a long way to go, and we've broken out to the downside. So the bears seem to be in control right now. And let's zoom in a little bit. Take a look at the projections that we talked about in the previous video. And I mean, as you might recall from the previous update, I highlighted that really oil hasn't. Yes, it's been volatile, but it hasn't really done much in terms of direction over the last few months. It's just been moving sideways here. And we really were getting into the apex of this triangle pattern. Not an Elliott wave triangle necessarily, but visually a triangle. And we have a break of this trend line now. And you can draw it in different ways. Whatever way you draw it, it's broken. And we might really be in this third wave here to the downside as per the white count. So it seems to be a 1-2-1-2 setup that gives us a target projection for this white third wave to the downside. So what we can do, we take this wave 1, we go to the high of wave 2, and the first, let's say, micro support 100%. Let's just adjust that. So what we normally would like to see in a third wave is sort of this area between the 1.236 to the 1.618 extension. So that's 68.41 to 65.78. This seems to be like an ideal sort of range here. And then a wave 4 and a wave 5, and that could send us down lower eventually, right? So it's just based on the idea that this here is a third wave, and we seem to be in the main element of the third wave. So that's why the last update was so critical, because I think whichever way the breakout, would have been, either way, it would have been a third wave. So quite strong move. We see that right now. And this here seems to be a third wave, but even within this third wave, from a micro count point of view, this could have been a 1, 2, and obviously I'm running out of wave degrees here, but from the white count here, so we seem to be in the third wave of the third wave of the third wave. So that's why we see this strong move down. At the moment, I have every reason to believe this is continuing, right? I mean, the market can change its mind at any point, but for now, I'm watching for 68.41 to 65.78 as next target range before the next 4-5 sequence starts, okay? Now, if we then zoom in a little bit, I mean, what would be the first indication that things are turning around? Well, here on this oil futures chart, it would be a break. I would say it has to be a break above that last swing high. The thing is, this is so extended now to the downside. It takes a lot of move to indicate that something different is going on. But actually, I mean, if at least, I mean, I'd like it to stay actually below the trend line to follow through, to indicate follow through. Normally what we do also from a Fibonacci point of view, it's the 50% retracement of the last decline. And here we talk about 72.29. So any break above 72.29 would indicate that this is possibly something is morphing, okay? That would not invalidate the white count, but maybe it means that in the microstructure something is changing. But for a direct follow through, ideally it's staying below 72.29. That's the update about oil. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you're interested in daily updates about the S&P 500, as well as regular updates about stocks, feel free to check out these stocks and S&P 500 service. You'll find the link in the description. Thanks a lot for watching. Bye-bye.